Everyone. Welcome to the September Accounts Receivable Core Committee. My name is Gerald Floyd. I'm the Statewide Accounts Receivable Management Coordinator here at DAS, part of the Office of the State Controller. I always have to remember to add that now. That's a new area here at DAS, or I should say bringing it back. So I am part of the Office of the State Controller. So glad you all could be here today. As I just mentioned, I suspect this will be a fairly quick meeting, but we'll go through this, and if you guys have anything that you want to discuss, we can bring that up at roundtable. This kind of some housekeeping stuff. Please make sure you're on mute unless you have a question. You can either interrupt or use the raise your hand feature in Teams, either way, but appreciate that. First up, swarm announcement. Yesterday was the target date for completing your year-end AR submissions. It is just a target date. It is simply an encouragement to submit early so that swarm can have sufficient time to review entries and get back to you with any questions or comments, corrections that might be needed can be completed before the October 1 deadline. So it helps us by you getting that information in early, and I do really appreciate everyone that has been able to get their data in by yesterday, and I saw several that came in today as well. So please, at this point, don't wait until the end of the month. The sooner you get it in, the sooner I can get it reviewed and get back to you if we have any questions or comments on the data. So the October 1 is the deadline for everything to be in for anything that is applicable to your agency. I always need to clarify that since not everybody is subject to everything that's on the list that I had sent out. Does anybody have any questions about the year-end reporting? One of the things that had come up before we got started was should you go ahead and send stuff in before you make your LFO entry? The answer is no. Ideally, you would go ahead and use all the reports and the checklist and then make your entries to LFO and then send me an email and I can look at everything all at once. But does anybody have any questions on year-end reporting? None? Boy, the training must have went really well.
I actually do have a question, and
okay.
So this is the first year that I actually am working on it. It's been done by other people in the agency, and oh God, I just lost my question. What was it that you just said about?
So to
the deadline?
Make your entries to the LFO portal after you've completed all of your spreadsheets and so forth, and then send me an email with everything all at once.
I don't remember the question. I'll try to remember later. Yeah. Okay.
Feel free to add it to the chat, and I can always address it in the minutes if I don't get a chance to by the end of the meeting. And please, if even when this meeting is over, if you're looking at stuff and you got a question about how do I do this, and it wasn't something that stands out in the training as a example that we provided, please feel free to reach out to me, send me an email, give me a phone call, send me a Teams chat. Either way, I'm happy to help you get that question answered before you go and enter data that may be incorrect. So I'm here to help wherever I can. Any other questions on year-end reporting? Okay. Moving right along, next on the agenda, wanted to share with everyone that while for most executive branch agencies, this is not as much of a concern as it used to be, But we do have a statewide price agreement for our collection RFP, third-party debt collections. That price agreement is going to be expiring in 2025. And so we will be conducting a new solicitation in 2025. And as part of that, I wanted to share with you that if you are interested, probably at the beginning of the year, I will be conducting a work group, if you will, that will review all of the statement of work in the current price agreement and be looking to see, do those terms and conditions still make sense? Do they need to be edited? Are there things that we need to add, delete, etc. From those terms and conditions, statement of work, things that we're looking for vendors to do? Obviously, I would hope that a lot of the larger agencies, especially Department of Revenue, since they're now the ones that do the lion's share of the work with private collection firms. But there are others, such as judicial, that I'm hoping will be a part of that work group, since you're going to be the ones that are most impacted by the new contract. So just wanted to share that that's something that we'll be working on in 2025. Like I said, for most executive branch agencies, you send your accounts to DOR. DOR does the outsourcing. So it's not as big of an issue for you like it used to be, when the costs would come back and then they would have to be assigned manually to the third parties. But just wanted to let everyone know, if you do have current accounts that were assigned pre-centralization, there could be some impacts to those accounts with the expiration of the current price agreement. So along with, your year-end review, and having accounts that are listed in section 3B of the LFO report, if you haven't had any activity on those accounts, as mentioned in the training, those should be followed up on with those vendors and get those accounts returned. So that as we get to the expiration of the contract, you're not having to do a bunch of cleanup at that time. So just wanted to share with you that. If you are interested in being on that work group, please feel free to send me an email, and I will add you to that. And when we start meeting, I'll make sure that you get all of the documentation and the invites to those work group meetings. Any questions on that?
So that's just for people or accounts at the private collection firm, not at DOR, right?
Correct.
Thank you.
There will be an impact potentially for Department of Revenue depending on the results of the new solicitation, but it won't necessarily affect you directly at the agency. But just be aware that there can be some, as that transition occurs. For example, if a current vendor is not rechosen, I'm not sure the correct word for procurement purposes, but if they are not a selected vendor out of the new RFP, they'll have to get those accounts back and then redistribute them to vendors that receive the new contract. And there will be a little bit of time to kind of transition that, but it's the work will be done by DOR. Any other questions? All right. Moving right along. We are coming up on that a few months away from the beginning of the legislative session. And I just wanted to ask the question if any agencies are aware of any AR related legislative concepts that your agency has proposed, whether or not those have been selected to move forward. And just want to be able to track that information as we get into the session and, make sure that we're monitoring that during the session. So always like to ask if anybody is aware of any concepts that they're put forward. And if you don't know the answer now and you find out later that you've got something, please send it to me via email. I just want to make sure it gets on our list. Hearing none? Okay. The last item on the agenda I have before roundtable is I receive emails from various I guess you'd call them trade groups. One of the larger ones is called Inside ARM, Accounts Receivable Management. And just a few things that I've kind of seen lately that I thought, this could be of interest to the state. Usually there are things that are, not going to impact us directly. But this is a couple of things that I wanted to share. The Consumer Finance Protection Bureau and their FDCPA annual report for 2024. There was a couple of things in that report that I thought was interesting. One is consumer debt has more than doubled in the last 20 years. However, the number of third-party collectors has decreased by roughly 25%. That could be a variety of things, it could be, conglomeration or mergers of different businesses. And so the count is going down, but the, capacity is still there. But the report identified just the number of third-party collectors is going down. This report also talks about a number of the various complaints that are received in regards to the FDCPA. And one of the biggest complaints is attempts to collect a debt that is not owed. That was 53% of the total complaints that they received. And out of nearly 70,000 complaints that were submitted to or by the CFPD, the Consumer Finance Protection Bureau, that were sent to companies for review and response, basically meaning that the complaint that they received from the consumer raised it enough that it wasn't just a note of, somebody did something, but more, we want you to respond to this complaint. Out of those nearly 70,000, 80% were closed with explanation. This can be closed by the credit collection agency as far as the account being worked. Can also be a removal from credit reporting. Again, this is typically talking about consumer debts, and so most of those would be something that is reported on a credit report. But basically that closed with explanation is we didn't find that we could substantiate or prove that debt. And so it's a sign of inadequate documentation and resulting in the collection agency closing the account. One of the challenges that a third-party collector has under the FDCPA is an attempt to collect a debt that is not owed is a violation of the FDCPA, and they could be subject to penalties. So is that 80% an indication of just, hey, we don't want to risk getting a penalty, so we're just going to close the account? But it was a fairly high number, I thought, and so it kind of just became something that, in correlation to the next item that came out through the Inside ARM, was, and this is actually not a relatively new case. I think it was actually, I guess, finalized in 2022, but it was associated with a case where a A district court ruled that a debt collector's attempts to collect an unpaid apartment debt, so this was somebody had signed a lease, they moved out before that lease, so they had unpaid rent. The property manager basically had determined that the plaintiff had forfeited their security deposits, but they still owed the rent. So when the account had gone to collections, the plaintiff in this case challenged that the balance that was being collected was inaccurate because they should not have forfeited the security deposit, but applied it to their balance owed. And so in this case, the trial court granted summary judgment in favor of the plaintiff, concluding that the strict liability provisions of the FDCPA made the defendant or the collection agency liable for collecting the incorrect balance, even though that collection agency had reasonable belief, in quotes, that the amount it was trying to collect was accurate. The court went on to say that even if the defendant's error was bona fide, the defendant failed to satisfy its burden of demonstrating it had maintained procedures reasonably adapted to avoid the violation by simply relying on the representation of the validity of the debt from the creditor. So I bring both of these two things to the conversation today, really kind of, how does this impact the state? And these two cases show the importance of the documentation necessary to support a debt when it goes to collections. Especially in the case where you've sent it to DOR and DOR is sending it on to the private collection firm, those third-party entities have potential liabilities under the FDCPA if the amount is incorrect or should not have been, it's not a debt that's owed to begin with. So it's important that we maintain the appropriate documentation so that at any point during the collections life cycle, any challenges made to the validity of the debt, that documentation can be provided to show how the agency came to the amount that it was owed, and not just a letter that was sent, but the supporting documentation. I know that in the records retention schedule, it typically refers to 6 years after a financial transaction. So you think about, especially with the RWO status at DOR and so forth, you write off that account, you take all that supporting documentation, you put it into that file. 6 years later, it gets destroyed based on that records retention process. And at some point down the road, new information becomes available that, say, it results in a garnishment of that account or a reassignment to a private collection firm because another debt to another agency came up for the same debtor. When that challenge comes in to the validity of all the debts that are being collected by that collection agency, if you don't have that record of the supporting documentation, that third party will be unable to provide that proof or validity of the debt, which again puts them at risk under the FDCPA. And so we would recommend that agencies, look to, even if an account is written off, while there's a 6-year retention on the financial transaction of the write-off, we would recommend keeping, basically a collection file, if you will, until a debt is paid in full. And then, have the records retention kick in after that. I know this has been something that has been brought up to the Secretary of State Audits Division, Archives Division. But I haven't seen any changes in the records retention at this point. But I wanted to use these two cases as an example for why it's important to maintain those records, even if the agency has written off a debt, because a write-off is still a legally valid debt that can be collected. And if it's still at DOR, it can go through any number of collection actions, even after it's been in that RWO status. So again, I just wanted to share this as some things that are going on in the collections industry that I thought had some correlation or could impact what happens at the state based on these, this court decision, for example. It can certainly come back to be something that more and more challenges are submitted, and therefore collection agencies are going to be having to work with the creditor agencies to obtain that proof of or validity of that debt. And there can be some potential changes to how those third parties, when accounts are sent to them, of what their, what the Consumer Finance Protection Bureau says they need to do to verify that debt before they begin the collection cycle. So still remains to be seen, but I just wanted to kind of make everyone aware that these were a couple of things that I felt were important to mention, and for you to begin looking at how do you retain that support for the validity of the debt that's owed. Any questions on that? Hearing none? Okay. Well, if you think of anything, again, feel free to email me, call me, Teams chat anytime. I'm happy to address any questions if you think of them at a later point in time. Roundtable. Does anybody have anything that they want to bring up? Questions, topics, ask the peer group? None? Boy, you guys are quiet today. Go ahead.
I sort of have a LFO reporting question.
Okay.
So I'm kind of stuck on something, and it's something I've kind of run into year after year, is that like my kind of remaining balance of unassigned accounts. I know that they reflect a certain number of accounts that have gone through the DOR cycle and are open judgments for 10 years and kind of like outstanding, but they seem to be the same ending balance as last year. And I'm wondering if I need to use adjustments section to kind of increase and decrease them according to the new count and new ending balance of this year's outstanding unassigned accounts. Or it's not outstanding unassigned, it's really section 5 accounts exempt for assignment, but I use that sort of ending balance amount to adjust the actual reflection of that.
I see. So your exemptions are the same value as prior years, am I understanding that?
Yeah. And really that's because all of our collections, like in other funds, are always like kind of set and collected. There's really no like liquidated and delinquent accounts, really. All of our liquidated and delinquent accounts really are at DOR. And if we have any excess after the fact, it's because of those open judgments.
So are the open judgments, did they ever go to DOR?
They did. They've gone through the cycle.
Okay. And are they there in RWO status now?
Have been written off fiscally, but are still open judgments in the sense that they are open because they're they have a 10-year expiration date.
So if you've written them off, it is appropriate and okay to reflect that in the LFO report section 2 as a write-off. It is still a valid debt, and that's why the term write-off means that it is still a legally valid to be collected debt. versus, say, a bankruptcy discharge where it is an adjustment or an abatement where the amount is determined not to be owed. So even though you still have a mechanism by which, if it became collectible, you could go after it, think of the LFO report as similar to in the state financial reporting, you have an allowance for doubtful accounts. Now, if you didn't do the write-off and it was just part of your ending balance, then you could use that doubtful in the LFO report as well as a tool to help LFO understand of the balance that you're reporting, how much do you believe is never going to be collected. But if you did a write-off before, just because it's still an outstanding judgment doesn't mean you should continue to report it to LFO, if that helps.
That does help. I think that does help. Okay. All right. I'll follow up with any further questions later with you offline.
Okay.
If I can't figure it out. Thank you.
Yeah. Any other roundtable questions, topics?
I would like to ask question in case somebody dealt with situation like this before. If refund check was issued to the debtor, was not cashed and ended up in state land, how can we get this money back because this refund check was issued incorrectly by error?
Well, I think that probably depends on the agency. I know that there are some conditions by where, for example, an agency with warrant authority could issue
Yeah, we
a
have warrant
garnishment.
authority. It's DHS.
So you could issue a garnishment to the Department of State Lands and that account that basically says you can see that there are assets that they're holding for an individual that owes this debt that you have the ability to garnish on, and they would process that. I know that there's a couple of different agencies that do that. So,
Okay, thank you. That's helpful.
unfortunately, I don't think there's a mechanism by where we can just kind of do, hey, we're owed this debt and we see that you have these assets. You can't just automatically do it. The garnishment is the legal mechanism that provides the debtor with the notice that garnishment is going to occur. They have the ability to issue a challenge to the garnishment, but that all happens with the agency that issues the garnishment. So kind of takes state lands out of the middle of it, but it's a.
But if money held by state land, technically
Right.
we need to send garnishment to state land to
Correct.
request this money back. Okay.
Right. But there's a notice of the garnishment that goes to the debtor as well at the same time that you're issuing that. And so that's their notice to the debtor that says, hey, we've sent this garnishment to state lands. If you don't think it's valid, here's what you need to do. You issue the challenge to the garnishment under ORS 18 to the agency that issued the garnishment. And so that's their ability to go to you and say, I don't think I owe this. I want my money. But it's a mechanism that's defined in ORS 18.
Okay, thank you so much.
Yeah. Anybody else have any experience working with state lands? All right. Any other questions, comments, for roundtable? Hearing none, our next meeting will be on November 19th. So at 2 p.m. So I hope everyone has a wonderful time between now and then. And again, if you have any questions about the year-end reports, feel free to reach out to me. I'm happy to answer those. Otherwise, get your stuff in as soon as possible for the review, and hopefully no later than October 1, which is the final deadline.
Hey, Gerald,
And
can you hear me?
Yeah.
Hey, this is Pam Lara, and I work for the Department of State Lands, and I'm just
Oh,
thinking of that
great.
question. If it's unclaimed property, they move to Treasury. I don't know what assets we would be holding. Anyways, just helping out the
Oh.
lady that was before me. Yeah, so
Thank you. Thank you.
usually
Yes,
that was
that's
unclaimed property, and that went to Treasury. Just helping.
good clarification. Thank you for that.
Uh-huh.
So if it's in Treasury, do we issue garnishment to Treasury or we still issue garnishment to state land and you deal with, and would you deal
No.
with Treasury? No?
It would be to Treasury. It's now
Okay.
a program under Treasury. Used to be
Correct.
under state lands, and statutorily that was moved to Treasury. I forgot about that, so thank you, Pam.
Yeah,
I
no
forgot
problem.
about it too. It's happened, what, like couple years ago? It
Yep.
was
Yes,
recent change.
about 3 years ago. Yeah,
Yes.
yeah.
Thank you for reminding.
You're welcome.
All right. Well, with that, we will be adjourned for the day, and we will see everybody on November 19th.
Thank you so
Thank
much.
you.
Thank you very
Thank
much.
you.
Thanks, Gerald.
Thank you.
Bye.
Thank you.
Thank you.